Well, time to move on to our next management as promised, eClerx. That's the stock on our radar. Well, let's focus on what happened in the past quarter and what's the way ahead. We're joined by Mr. Srinivas Nadadur, the Chief Financial Officer at the company. Hi, Srinivas. Good morning and good to see you in. Well, growth slowed down a little bit in quarter four. You know, if I compare it with quarter two and quarter three levels, could you tell us any reasoning for that? And also for the last year, if you look at the dollar revenue number, it's close to around 10%. On that sort of a base, what could be the rough range we're looking at for the coming fiscal?
Right. Thank you. Thanks for having me on the show. So in Q4, we had to replace revenue from one of our clients that we lost. And that was that. And replacing that revenue, I think we've grown by about 1.5%, which I think is fairly good growth rate. And if you take that impact out, then it is comparable to what we have done in the previous couple of quarters. Your second question was on comparison between FY23 and FY24. So FY24 has been soft for most of the ITES companies, and we are no exception. The macroeconomic environment continues to be challenging. Clients are putting budgets on hold or postponing their spend. And that's the reason why there has been a slowdown in growth from FY23 to 24.
Okay. So going ahead, sir, what should the guidance be? We got what happened in the past year. But for this year, what should we be looking at? There's a bit of an uncertainty in terms of decision making. It's more postponement than cancellation. But put everything together, what is the growth number?
So we don't give guidance generally, but I would also like to use this moment to state that we've released a refresh of our strategy for the next 3-4 years. And this is based on our new CEO who was joined last year. And our focus is to grow the wallet share with existing clients. And we've been always a niche company and to focus on our niche strengths and pursue new clients and logos and expand wallet share in existing clients. So put all of these together, and I think our aspiration is to be in the top quadrant of growth and continue to have industry-leading margins. But a specific number I am unable to give you.
You did speak about margins, so let's talk about that itself. I mean, there is a wage hike which is effective 1st April. So what, according to you, could be the margin drop because of this? Even QOQ, we saw a margin drop from 23% closer to 21%. In light of this, what's your target for FY25?
So our target for FY25 for the full year is about 24 to 28% on EBITDA margin. And part of this is because of the investments that we are making in both strengthening the sales team. So we've added senior leadership in our sales teams, in our sales geographies. We are also strengthening delivery capabilities. So there's been addition of senior folks even in our delivery centers. So the full year EBITDA, we expect it to be somewhere around 24 to 28% for FY25. For FY25 Q1 in particular, because of the impact of the wage hikes, we expect the immediate drop in margin to be somewhere around 300 basis points.
All right.
And
so for
usually
quarter one,
what happens is it kind of picks up, margins pick up from Q2 to Q4.
Okay, but you know, Srinivas, I need to ask you this. This range of this margin is very wide, right? The upper end is what you've done, 27, 28%. But the lower end is around 24%. What do you think? Will it be at the median or will it be closer to the lower end? Because this margin band is close to a 20% swing.
Yeah, so when we do our internal projections, we come up with a range which factors into account the most optimistic scenario, which is the top end, and the most pessimistic scenario, which is also the bottom end. So all things being equal, we should be somewhere in the middle of that range.
So realistically,
but 26. It really depends on, how the investments that we are making in the sales team, how they pan out, how growth turns out. So there are a lot of uncertainties in there.
Right. So let's go with a realistic 26% for the year, given it's in the middle of your range. Attrition for most companies has come back to pre-COVID levels. For you, it's still elevated. I mean, 23%, roughly 23% in the fourth quarter. What explains that and what are you doing to stem that?
Actually, attrition for ITES companies is a lot higher than that for IT companies. And for us, 22% is actually low. So in the pre-COVID years, we used to be anywhere between 30 to 40%. So we are still a little way off in terms of the current attrition percentage, which is about 22, 23. And therefore, we are fairly in a comfortable position. So we're not overly concerned about attrition.
Srinivas, what about this split between the focus on the top 10 clients? The top 10 clients, the growth has been good. But on the emerging clients, well, it's been lacking actually. If I look at it, it's more or less flattish. Will you mentioned earlier looking at increasing the wallet share of the existing clients, but what about new clients, emerging clients? Do you see that you could see some pickup even on that front?
Yeah, so part of our growth strategy is to focus on expanding wallet share with strategic clients and to grow and have multiple services with these smaller clients. So today, our smaller clients, we have only maybe one or two services that we provide to each one of them. We need to expand the number of services that we provide to our emerging clients. And that's part of what we intend to do in the future.
Right. We have to ask you this question because this is on everyone's mind right now. The big risk that everyone has in terms of growth, ITES companies, is Gen AI. I'm sure you answered this question multiple times, but what best can you say to the street who's a little worried about medium-term growth prospects because of Gen AI?
So we look at it as an opportunity and not as a threat. And what worries us about Gen AI is not the fact that work will get automated. What worries us really is whether we will continue to stay relevant and whether we will use Gen AI in the ways that our clients will in the way that it will make sense to our clients. So it's less about being worried about Gen AI. It's more about what we can do with it. And I'm sure most other companies are also taking up a similar approach.
Good speaking to you, Srinivas. Thanks a lot for joining in. Maybe with the next time you join us, we'll nudge you a little bit more on the margin front because that band is quite wide. But as you gave us guidance, 24 to 28% for the year. First quarter, it could effectively see a drop of around 300 basis points because of the wage hike, which will be made up in the latter part of the year. It's good speaking to you, and thanks a lot for joining in here on CNBC TV 18.